Hello, accounting students. This is Mrs. Bloomquist, and this is the first video that you will be watching that is going to be helping us with the transition into a more blended format for class. This particular screencast is going to introduce you to the concepts in Chapter 2. You're going to want to have your book handy with you as you watch the video. I'm going to highlight some of the most important concepts for you as we go through this video and potentially refer you back to pages in the book that you might want to dig into. So please remember that you're going to use your book as a guide as you work through this. Now, the first lesson that we're going to look at in Chapter 2 is Lesson 2-1 regarding using T accounts. And that lesson starts on page 30 in your book. For this particular lesson, we're going to really be looking at the relationship between the accounting equation and a T account. And T accounts help us to figure out what is going on with the account balance so that we can figure out if it's increasing or decreasing depending on where that account falls within the accounting equation. And this is a very big idea for accounting and incredibly important to your understanding as you move forward. So you just want to make sure that you're really focusing on that. Okay, there's a debit side and a credit side, and the determining debit side versus credit side depends on where you're at in the accounting equation. So the three objectives: the relationship between the accounting equation and T account, identifying debit and credit side, and then restating and applying the two rules that are associated with an increase side on the account. Okay, so first of all, remember that when we are looking at the accounting equation, we're thinking about transactions. Okay, we're thinking about, hey, there is a bill that came in that we need to pay. Obviously, when the business goes ahead and writes a check to pay for this bill, then they need to do the accounting follow-up to make sure that they have correctly recorded the transaction to the accounts that will be impacted. Okay, so as we are looking at what's going on with the accounting equation, we always want to keep track of what's on the left side of the accounting equation, or our assets, and then what's on the right side of the accounting equation, which would be our liabilities and our owner's equity. And remember, the important piece is these always have to remain in balance. So no matter what you're doing, you always need to make sure that the left side and the right side of your accounting equation stay in balance. All right, so just some terms here that we want to make sure that we understand. These are on page 33 in your book. The record that summarizes the information that affects any single item in your accounting equation is called an account. Okay, and the device that you use to analyze or review those transactions is called a T account. Okay, so a debit means the amount was recorded on the left side of the account, and a credit means it was recorded on the right side of the account. So in that T equation, the left side is debit, the right side is credit. At this point, I would encourage you, if you need to get yourself a sticky note and write it down on a sticky note and stick it in your book so that you have it handy. You probably will be referencing that information, left side, right side, debit, credit, accounting equation in balance, probably a lot over the next several lessons. Okay, so as you look at this, your T account, left side debit, right side credit. So we have our debit side here, our credit side here. Now, remember that you can have T accounts that are on your assets side of your equation, and you can have T accounts that are under either the liabilities or the owner's equity. Okay, so, and honest to goodness, this is one of those concepts you literally just have to learn. Okay, for assets, those are on the left side of the accounting equation. They increase on the left or the debit side of the account, and liabilities and owner's equity those are on the right side of the accounting equation, and those increase on the credit side of the account, okay? So again, that sticky note, you probably want to write for yourself so that you have a good sense for which side is increasing and which side is decreasing. The normal balance is the side of the account that increases. So assets have a debit normal balance, liabilities have a credit normal balance, and owner's equity also has a credit normal balance. Here it is visually for those of you who like to look at a picture. Again, on our asset side, debit increases. On our liability side, owner's equity or owner's capital, the credit is where we increase. So that's where our normal balance is, where we have our increasing. All right, so draw the accounting equation on a T account. And we just want to make sure we understand what that looks like. So again, assets are on the left. Those have to equal our liabilities plus our owner's equity on the right. What are the two accounting rules that explain increases of account balances? And as you think about this, assets are on the left side of the accounting equation, and assets increase on the left, or the debit side, so that's where the normal balance is. And for liabilities and owner's capital or owner's equity, we see increases on the credit side, which means the credit side is the normal balance on the account. Now, one of the things you want to be thinking about is why T accounts are practical or helpful to use when you're looking at the accounting equation. Why is that something that is going to be helpful to us as we're moving through? Okay, so why is it that we want to use those T accounts? What information does that give us as we're moving through? So you want to be thinking about that. Now your next step would be to go ahead and go out to Applia. Within Applia, you want to first do the work together assignment. After you successfully complete the work together, you can go ahead and do your on the own. Once you complete the on your own, you can move on to lesson 2. Good luck!